Welcome to TradeTheMBI.com. This is John. This report is for the 3rd. And, well, it's an interesting one when we look at the read of it. While we're still in this positive cycle, we had this huge blow up that caught a lot of people off guard, and it was really a reaction to speech from the president and that. And what we saw was the steel break up, but then immediately created a little bit of a V move right here. Now, we did get to a point where we had an extreme sell-off in shorts, which requires a lot of effort to keep moving prices up. We still had the shakeout going in the right direction. So a little bit of softness here as the short-term buyers faded out of this one really quick to take those gains. Not surprised. Usually we get about a 1/3 retrace into it. Looks like we're getting a little bit more from that. Not a shock. The ABM is going to start catching up to it at this particular point. Overall, though, you can still see solid maintenance of the cyan under red, but way into the upper echelons. And you can start to see now as we make new highs on lower shakeout peaks. Not a problem as long as you maintain that cyan under the red, but we're going to start to see some of that ease. And again, the 13.5 level for the orange going above tends to be a weak area. Likewise, exact same situation from a daily. So things were looking fairly strong before, but then as soon as that moved up, you're going to get some weakness, and that's just the way it works. If it retraces back out of it, it's not a problem. But that hasn't happened yet, so a little bit more of a backfill situation to it. Also, the euro right at the support zone, so they've got to keep that baby alive. Central bank is going to get involved there, and we'll see if they're able to maintain. If they are, then you shouldn't have any issues with that. But now we're starting to get back to reasonable levels for TLT and that. Again, we're going to start to see some of that drop, and it's going to start heading down to that 113. They haven't changed that target at all. Oil, again, the ability to just add into that. It was funny because I read some articles where there were a couple of big long plays for oil. Talk about being in defiance of what we know to be true. It's crazy talk. And unless you're going to see better numbers than 1.9 GDP, there's not enough demand to outstrip the supply, and that supply is enormous. And from a gold standpoint, a little bit of weakness in the gold, in that there's still a debate as to what the Fed can do, and I argue that it's still a little bit soft, but in general, you're going to get this backfilling, and then we had a positive extreme back here and there. They'll have all been filled, but a little bit of a DOC spread that started back a few days ago. But needless to say, it's still holding up well. It gives opportunities for new buys. We've also got a full reset of the steel coming in here now, so short-term buyers completely reset. Midterm ones, you're hovering right around the 0 point, which is still a net positive from a balance standpoint. Here's our 5K chart. Let's squeeze this just a little bit so we can capture it. So went red back over. Well, it started actually back here from the shakeout standpoint. Gonna have that pink bar start to catch up to that pretty soon here. And we continued below the short algo. I mean, we didn't even get much of a pop over the long algo, but like right there, you hit the short algo, rejected it completely. That was the best little run, and then we started coming down. And then it started to look like we might see some improvement. The problem with it is that you maintain that orange stuck between cyan and red, and that's always a sad situation. So we ended up with a little bit of a pop out of it, but at the same time, as soon as the orange popped out of it, what did you get? You get the steel crossing below the cyan, which is always that short-term buyers fading right at a key moment. And sure enough, that was secondary causality, and ideally too, shakeout right at the positive signal. And once that caved, even in the next bar, if you waited to get the confirmation, it was clear, and then boom, it's just decayed since then. So you can see we've stayed pretty much into the oversold, but beautiful with that orange staying right inside of that cyan, which is just a beautiful way to be able to see the continuation of that pattern, and that's why love it when you can actually see that take place and do it over duration. It was true that when we saw this little dip down here, there was the potential for a nice little buy. It just was not sustainable. And even though we hovered in that neutral zone, you clearly got the indication when the steel broke down below there that you could take an advantage of another little run to the downside, and that's exactly what happened. So all in all, we just have to continue to go with it. Oh, I showed the 50K on the Skype chat before. It had taken the buy at the little peak right there, and sure enough, started to get pretty frothy with that orange over the 13.5, and it's just starting to take it. It's a little longer on the 50K for reaction to play itself out, but that's okay. That was still interesting to see that, because when that's why I posted, because once it's sold out, 50K is usually pretty good. Sometimes you get a little bounce afterwards, but it ends up getting it right in the end. As always, though, trade well, and we will talk again in the Skype chat.